What gold has certainly done in the past cycles, and certainly what we're seeing in the present cycles, it's acting as the bridge. It's acting as a bridge to get to an environment where we understand there is going to be a glut, a deficit rather, in the supply-demand curve for copper. We're starting to see exactly some of the things, at least on the M&A side, that initiated that activity circa 2005 to even 2004 to 2011.
Where is the commodity supercycle taking us currently? What's next for gold and the commodity space overall? We'll be talking about this and the overall mining industry outlook with our next guest, Sam Lee. He is president and CEO of NorthIsle Copper and Gold Inc. That's NCX on the TSX. Welcome to the show, Sam. Good to see you.
Thank you very much, David. Great to be on your show.
Yeah, I'm curious to get your thoughts on what you mean by what you told me offline, which is that gold is leading this super cycle. But before we get your outlook, let's talk about you. Give us your background and tell us how you got started in this industry.
Absolutely. So I'm a metallurgist by training. My thesis actually was on a copper gold porphyry back in the 90s. Graduated at U of T. But I spent 20 years in investment banking, circa 2000 to 2020. I most recently led a number of initiatives at CIBC World Markets, including their Latin American cross-border initiative, their ASX, TSX listed initiative, and then most recently I ran their Vancouver practice in the Global Mining Group.
Okay, perfect. We'll circle back to this and talk about your backstory in more detail, and of course the company itself. Let me just share my screen for the next segment here. This is the gold price overlaid with copper in USD terms. And as you can see, they've both been somewhat correlated with each other, moving in tandem in an upward trajectory over the last year and a half. And copper, as you know, has been breaking new highs, especially following the tariffs on copper that Trump recently imposed. Gold is also at unprecedented levels. So both of these metals that your company is involved with are at all-time new highs. What are these new highs signaling in relation to our global economy, Sam?
Oh, well, that's a tough question. I got to use my crystal ball to answer. But maybe the easiest way to do it is stepping back and kind of looking at a more historical period. Pretty much when I started in the mid-90s, copper was obviously trading at about 60 cents. Gold was subs $270 per ounce. I remember actually being at a CIM conference where Pierre Lassonde spoke to us students saying that gold will never hit below $300, and it did briefly, which was really something.
This is what year again, Sam?
This was back in 1997, I'd say 1997-ish.
Okay.
And so what really, through my experience, I've witnessed is that copper has always been an incredibly important commodity as it relates to not only electrification, but the urbanization that we saw happen circa 2000 to 2010. There was a massive GDP growth in China, obviously, which led the significant demand, pretty much starting from 2000, effectively creating that super cycle, that 10-year upward momentum super cycle that we saw. It was driven by electrification of people coming into the cities, and it happening in such a concentrated manner, which obviously created an immense amount of activity in the investment banking universe, for which I would say the predominant amount of my $100 billion of deals was focused on M&A in the copper and gold space circa 2005 to 2011. What is interesting, obviously, in Canada, is what people know very well, is that gold is a very, very, very specific commodity currency that Canadians really invest in. And as an investment banker, you would see over 80% of the deals, the equity deals that we did during that period of time came from precious metal companies. And what we always used to notice is that gold was that leading indicator of activity, of investment banking activity, which really spurred multiple cycles through the 20, 30 years that I was part of it. So what we're seeing today is something that's quite similar, right? We're seeing an environment where Gold obviously broke out over the past year, year and a half due to the usual narratives that stimulate activity, including inflationary concerns, global instability, wartime scenario. This all culminated into, quite frankly, the perfect storm over the past year, year and a half, which really started to lead this cycle. I think in terms of copper has been, quite frankly, in that period of medium to long term appreciation. Anyone in the industry, in the resource industry, or even outside of the resource industry, understand that copper is the electrification metal, the metal that is going to drive our ability to not only satisfy the world's energy requirements in a clean manner, but also the growth around technology, innovation, etc. But it always has been that kind of medium to long-term proposition. It's always 2, 3, 5, 10 years out. What gold has certainly done in the past cycles, and certainly what we're seeing in the present cycles, it's acting as the bridge. It's acting as a bridge to get to an environment where we understand there is going to be a glut, a deficit rather, in the supply-demand curve for copper. And what has happened today is reflective of that movement. We have seen now the narrative starting to shift from a reasonably stable environment in gold to something that could be starting to recognize the more global, expansive nature of the copper opportunity. And we're starting to just not only see that in the pricing of these commodities, but we're also starting to see that in where institutional investors, large institutional investors, are placing their money.
You mentioned that in 2005, 2011, that period, M&A activity and banking activity for copper and the metals was up extraordinarily due to the bull rally at the time. It's interesting how this cycle, I've been getting just anecdotal feedback that this cycle is a little bit different in the sense that even though prices are breaching new all-time highs and it's clear that we're in a new bull rally, there hasn't been as much activity in terms of banking and deals and M&A now versus 15 years ago. Can you comment on that?
Yeah, absolutely. I actually beg to differ. We're starting to see exactly some of the things, at least on the M&A side, that initiated that activity circa 2005 to even 2004 to 2011. Remember, in at least Canada, most of you will remember some of the things that started it, the Falcon Bridge, the Noranda deals, the Placer Dome hostile transaction from Barrick, which I advised on, the Rio Tinto Alcan deal. There were a number of unsolicited behavior that really emerged in and around the 2004 to 2006, 2007 era. That's actually what we're seeing today, right? There has been some significant unsolicited behavior, including Glencore's action against Teck a couple of years ago. There has been bigger cap M&A that for producers, which typically start off the activity as we cascade down throughout the cycle into more junior and then developer space. So that's where I kind of think we are right now. If you were to peg where we are in the cycle, just based on some of that M&A activity that we're seeing today versus what we were seeing circa 2004 to 2011, I'd say we're kind of in and around the 2005, 2006 spot where we are starting to see opportunistic M&A. We're starting to see significant deals being done for projects that are in production. And then now we're starting to see that cascade down in a number of deals that have been announced over the last couple of months in that developer space and certainly in the exploration space, right? Some of the biggest transactions to date have been for district scale opportunities for undeveloped projects like the Vicuña district, $10 billion district that BHP has obviously bought into with the acquisition and the partnership around Jose Maria and Filo. So we are starting to see that type of activity emerge in the M&A space. I do agree with you, though, on the equity space. The equity space has been challenging over the past, certainly 10, 15 years as systemically things have changed, right? It all started from the Elliott Spitzer days in 2000, in the mid 2000s, where there was a separation between research, sales and trading, and investment banking, and that really decapitated the industry because you can't pay the research analysts enough to stick around because of that separation of church and state. And then we came into the electronic trading system, the ETFs, the indexes that really do cannibalize the traditional form of how things get traded and how money gets raised in our industry. So yes, I agree. On the equity side, at least the public equity side, there has been a significant contraction around the amount that specifically mining funds have to invest in more risky opportunities. But we are starting to see that emerge now. I wouldn't say we're anywhere near the levels we were in circa 2006 to 2009, but we're starting to see a little bit of a recapitulation in the general equity markets, starting from the seniors and the intermediates, but cascading down into the junior exploration companies.
Is there a particular type of deal that is hot right now, or is it just varied across jurisdiction?
Yeah, so I think that as you go from the bottom of the cycle to the top of the cycle, it's all essentially correlated with risk tolerance, right? So towards the bottom end of the cycle, when you're in the second, third, fourth innings, you're looking for investments that are very low capital intensive, that are low risk, good jurisdictions that have senior support, that have cornerstone investors, that have institutional or not institutional investors, but strategic investors taking up, opportunistic positions in companies. That's the type of mentality that we've been, quite frankly, going through over the last 5 years. Those are the companies that have managed to survive the dearth in capital over the past 5 years. I think that we are entering into an environment now where we're starting to see a broader group of investors that are coming back into the industry. Again, not certainly even close to the same force that we saw it during the combustion of the last cycle, but it's supplementing these strategic positions and cornerstone positions that are allowing companies like ourselves to expand our capital breadth and depth and access.
So yeah, that's a good segue. Where does NorthIsle fit into your macro picture of this super cycle that gold and the other commodities that we've talked about are currently in right now?
Fantastic question, right? Because we are trying to be effectively a project and a company that is relevant across the cycle, right? So what we have is a copper gold porphyry system, a large copper gold porphyry system in one of the safest jurisdictions, Canada, British Columbia, that has district scale opportunity, right? So as you can, I just mentioned three things that have tremendous levers to every part of the cycle. And what we've just done recently is added a fourth lever to the proposition. I think people understand that copper projects are typically very large. Porphyry projects are very large. And what we've just released, what you've just put up there, is an initial project PEA for what we consider a starter operation, a 30-year starter operation that opens up the entire district, that not only is material and significant as it relates to the amount of gold and the amount of copper it produces. Not only is it materially significant as it relates to the very big economic number of $2 billion after tax net present value, but it also speaks to the first part of the cycle. Again, that's part of the cycle that is more risk averse and less tolerant of risk in accomplishing a very, very attractive capital intensity. Remember how I said that people in the beginning of the cycle tend to look for small being capital intensive projects, and then people in the second half of the cycle tend to look at very, very, very big. So with this PEA that we released in February, we've effectively done both. So it's essentially a $2 billion plus NPV after tax with a 29% IRR after tax. These are all done at analyst consensus prices back in February of $4.20. and 2150 gold. Gold is currently close to $3,500 today. Analyst consensus is currently at $2,600 today. This project was done, or this PEA was done at 2150. To put things in perspective there, this project would be a $4.9 billion project after tax NPV if you were to assume a $2,900 gold and a $4.60 copper price, which is what spot prices were in February. So this is a truly remarkable project it's a truly extraordinary project from a materiality perspective, but it's also speaks to risk tolerance in the fact that its capital intensity is extremely attractive as well. 1.7 times net present value to capex is really second to none when it comes to these larger copper gold porphyry projects. And the life of mine is over 29 years with a payback of 1.9 years. So you're not going to see a project certainly that currently isn't owned by a major that has these numbers, this return, this
Well,
economic parameter.
what's the industry average? How the 29% IRR and 1.7 times base NPV to capex? What's the how does that compare to your peers?
Yeah, sure. So there's another slide if you go down that does compare those four metrics. If you go down one more slide. So what we've done, and this is a very typical thing that an investment bank would do, we would look at these four metrics: IRR, which is return, mine life, capital intensity, and of course size. So what we've broken this down is how this project PEA looks like compared to other copper projects that are less than $2 billion, i.e. arguably smaller and less material, versus copper projects that are bigger than $2 billion. So the one in the gray, the bar in the gray represents bigger than $2 billion. The one in the blue signifies less than $2 billion. Ours is obviously in the copper and gold color. And so as you can see on every single metric, we are second to none in with respect to the yield. So on an IRR basis for a project that usually has a 29% IRR, usually you would not expect a $2 billion plus or a 30-year or 29-year life of mine project. Projects with higher IRRs are usually associated with smaller, shorter project lives. In terms of $2 billion plus projects, you will rarely, if ever, see a project with a payback period of 1.9. So the average payback period for these larger projects, big or larger or smaller projects, is between 3.9 to 4.5 years payback. Ours is 1.9. Similarly, on a capital intensity project, for a big project like ours, over $2 billion, no matter whether you compare it on the NPV to capex metric or the capex to annual production metric, ours is again second to none with respect to capex intensity. So these are the numbers that support what I'm saying, that this project defined by the PEA is not an ordinary project. It is quite extraordinary.
Sorry, how is this 1.9 years payback period? What are the assumptions behind this? Are you producing currently?
No. So there's a cash flow chart that if you scroll down, it shows
Sure.
it explicitly. If you keep on going down, that shows no, keep on going down, the capital profile. There it is, slide to 25.
Yeah.
That shows explicitly how this all works. So the initial capital is in blue. So the 1.1 billion dollar Canadian, which is spent up front. So that's a 2-year construction period. We are not in current production today. The phase one of this project, which is dominant by gold, is as you see it. So the cash flow from phase one is indicated in the gold. The green line is the cumulative cash flow. So that's the net free cash flow after you spend money on the initial capex. And so as you can see, that 1.9 years payback is effectively the intersection of that green line and the x-axis in this chart. Once you pass that 1.9 years, the project starts accumulating cash flow and actually never goes below $100 million beyond that point where you spend capital for phase two. So phase two effectively gets internally funded by phase one, and that gets you the remaining 24 years. Phase one is approximately 5 years, and phase two is approximately 24 years.
So you're saying even in the future, when you do expand, this is your Great Bars expansion capex, you don't need external funding for that?
Correct.
That's going to be from your corporate treasury?
Correct. And you can see the cash flow never goes below 100 million bucks as per the green line, because there is so much cumulative cash flow coming in from those first 5 years. So that's the phased approach. That's the modular approach that made Blackwater Artemis the success that has been done. Recall Blackwater Artemis was this, or at least Blackwater was a similar type of project as ours, in the respect that it was big, it was capital intensive, and they needed to be able to break it up in a way that they could fund the initial capital that then gets them the project that then funds the rest of the company. And so, they were a less than $100 million market cap company. In 2019, they initiated this modular approach, this phased approach that broke up the capital expenditures, similar to what we are doing. So it reduces the capital intensity because they're going after the higher grade project, and then that phase one, phase two, then funds the rest of the project. And now they're clearly a $4 to $5 billion company.
So phase one is gold primarily. Is that what you said?
Correct. It's about 200,000 ounces of gold and about 50 million pounds of copper. So on a revenue breakdown, that's about 70% by revenue gold and about 30% copper. The life of mine is approximately 48% copper, 45% gold, and the rest of it is moly and rhenium, which is also critical metal byproducts of this project. So this is a critical metal project, but is effectively using gold upfront to fund the big critical metal project. And we all know gold is a critical currency, not a critical commodity, and it holds premium valuations that reduces your cost of capital.
Why is phase two predominantly copper? Is gold going to be depleted by year 5.5?
So this is a porphyry. So the wonderful thing about porphyries is that gold and copper naturally occur together. And if you see some of the initiatives that the big companies, including the Barricks and the Newmonts, and even to some extent the Unicos are doing, is they're saying, look, we want longevity in our projects. And so therefore we're not hesitant to go after big copper projects, because there's always gold that's associated with copper or vice versa. And it provides you that longevity, right? So that's what we have. We have a copper and gold porphyry system. The reason why it's more dominant in the first 5 years in gold and less dominant in the second phase is because, in terms of where we are in the porphyry system, that determines how much gold there is. So to get a little bit technical, in a porphyry system, it's a mushroom. The top is a lithocap. The stem is a potassic zone. If you think about the copper development and exploration companies, they're all focused on that sort of stem, the potassic zone. If you think about the gold companies, they all think about these narrow vein, high grade gold in the lithocaps. Well, we've got both as part of our porphyry system. We're just in different parts of the system, which then informs how much gold and copper are there. So the way I see it from a geological perspective, we've got the best of both worlds.
Right. Okay. So a strategic question. I understand that perhaps you need gold upfront to fund the expansion and then later on into phase two. But some people might ask you, well, copper is a more strategic and critical metal. It's needed for the expansion of not just electrification, but basically the continuation of all construction, including the advancement of AI and data centers. And there's going to be a huge copper deficit projected as of, in a few years from now. Why not prioritize that first?
Yeah, so it's a great question, and it speaks to the overall strategy of the company, which, I do want to, introduce our board of directors for the company. The reason why is because this is a blue chip board. So the vision is blue chip. The vision is, we're not about tiny little projects here and there. We're talking about a very long-term proposition. And so on our board, we have two mining Hall of Famers, Dale Corman and Alex Davidson. Alex Davidson recently joined our board. He's ex-Barrick, multiple decades growing American barrack into the barrack that it is today. We have a gentleman that was had a hand at building some of the largest, if not the largest, copper projects in the world. Kevin O'Kane, who's ex-BHP, 38 years. He obviously worked on the Escondida. He worked on Spence, and then of course he worked on the Island Copper. He was the chief mining officer for Island Copper, which is the neighboring mine to us, so understands our proposition extremely well. And so I think that with that board and leadership vision, we have very, very big plans strategically for this district. The district itself is about a 50-kilometer district that we've identified today, that 60 years of exploration has identified today, that starts with the BHP's Island Copper Mine on the south east part of the area, and expands all the way up to the wind farm in our northern area that we hold 100% of those tenements. And so to answer your question, why are we not focusing on arguably the most critical commodity out there in terms of copper? Well, we have to do it sequenced in a way that, as we said, the gold is the critical currency. It allows you to fund these bigger projects with a much lower cost of capital. And so that's our initial exploration focus. That was our initial exploration focus in 2022, where we moved from a $50 million market cap to a $150 million market cap through really good discovery exploration of that higher grade gold zone. The second part of it is going to be, how do we expand that higher grade gold zone in the context of the current 30-year PEA that we currently have? And we're now almost 70% of the way through the drilling to answer that question, and we should be coming out with a batch of results that will allow the market to calculate how much more incremental resources we have in that higher margin, higher grade northern zone. But the
Tell us about the. Yeah, sorry,
go ahead. But the third component of the exploration program is most likely the most impactful one, which is, what does the district provide in terms of generational opportunity? And this is where the board obviously is focused on. Alex Davidson, for those that you know, he's again worked multiple decades at Barrick. He believes and has publicly stated that he thinks that this is the next world-class district, based right here in our backyard in Canada. And so that is now the purview, the third lever that we are going to progress internally now that we are a $350 million company. We just announced a $35 million equity deal. We've now been given license by the market to walk and chew gum at the same time, right? To advance the development of this project expeditiously in a very favorable political environment. But then to answer the question, that's a starter pit. That's a 30-year starter pit. Starter pit to what is the answer to the question that we are looking to progress. And so, as I said at the beginning, if you think of this as a district opportunity, like the Vicuña district, the $10 billion district that BHP just bought into through Jose Maria and Filo. Well, we have the Jose Maria, right? It's the 30-year open pit proposition, the thing that opens up the district initially. And then the question is, well, where is the generational opportunity around, the Filo potentially underground opportunity, which is what we are now setting our sights on around the third lever of our strategy.
Right. So I understand the roadmap, but walk us through exactly how you're going to transition from a discovery company into a producing company.
Yep. So it's through the project PEA, the project that's been defined by the PEA, right? So it's initially phase one through the higher margin corridor, northern corridor, that informs the first 6 years. That then funds phase two, which is the lower grade but higher tonnage area that gets you to the 29 years, all included in this PEA. And then that starter pit, that area in that starter pit, then opens up the entire district, which could potentially be the generational opportunity for which we will initiate an exploration program very shortly and announce that.
Does NorthIsle eventually plan to produce itself, or do you plan to partner with a producer?
They can coexist at the same time, right? So in the end, we have a project description right now through the PEA that certainly is fundable and developable for a single asset company, and that's evidenced by Artemis Blackwater. We're talking about kind of the same levels of throughput. We're talking about the same sort of size, the orders of magnitude, same funding requirements to effectively get it started to fund that second phase. So that is certainly within the ability for us to progress. But I think that we are very much open and understand that the partnership equation is extremely important, not only to expedite permits, but also to make sure that we are going arm in arm together to develop the project as responsibly as possible. So we believe that that is the premise, the DNA of the company, establishing partnerships early. Part of this deal that we just announced last week indicated that Wheaton Precious Metals is coming in for the equity deal as part of a private placement. We've had extremely strong supportive shareholders in the past. Cornerstone shareholders, about 5 people, including myself, own about 45% of the company. Insiders and management team own about 20% of the company. We've now established really good cornerstone investors as part of this consortium group of partners that are going to advance us, and we'll continue on to do that. That to us is the best behavior. It's non-insular. It's the most logical, and it gives us breadth and brand recognition not only in the markets as we continue to establish these partnerships, but also brand recognition in the political environment that allows companies to expedite projects.
All right, well, that makes sense. But walk us through the next step. So what are we looking forward to next for North
Sure.
Island Copper and Gold?
So as I said, we're about 70% of the way through our exploration program for the first half of 2025. Those results will continue to come out in the near term. The initial strategy goal is to expand that northern corridor area with following up on new discoveries. So currently, the resource does not include an area that we call West Goodspeed, but we discovered West Goodspeed about a year and a half ago, and it's adjacent to that northern corridor area that it gives us the 65 to 70% EBITDA margins. So we will be establishing an internal resource very shortly on that, and that will then go into informing a pre-feasibility study that we believe is going to obviously get more attractive if we're able to continually advance and increase that higher margin area in the northern corridor. So that should be coming out shortly. The second and third part of the current exploration program is also now going to be explorative. So stepping out from that currently defined area at West Goodspeed and at Northwest Expo, we're looking to we're looking to find that causative intrusion that's effectively creating these formations, these deposits that are currently in the PA. So that should be very impactful if we make a discovery on that. And then, of course, thirdly, we're going to energize Pablo and his team. Dr. Maheo joined us recently from Arrow Copper, another billion-dollar-plus company. We're going to establish joint ventures with Silicon Valley organizations like Mineral X. Went to the conference the other day. That enables us to take the data that we have and create these correlations, causation effects through artificial intelligence and process that information at 1,000, 100,000, 1,000,000 times the speed that any human being can process it. That's the third part of our exploration strategy that I described earlier. It's to take 60 years worth of data to create these correlation causation effects around why these deposits, we've got 4 deposits and 1 producing mine in this district, why these deposits formed, and how can we create causation effects to triangulate and target the district so we could find those generational opportunities. To put things in perspective, for every 200 holes that the history of this company and this project has drilled, there is a discovery. which is one of the highest, from what I understand, one of the highest, if not the highest, success rates, discovery success rates in the world. To put it into other terms, we've drilled about over 120,000 meters of drilling collectively over the multiple decades, and we have 1.1 billion tons of resources. So, however way you cut it, this is absolutely a porphyry district play. This is elephant country. Whatever you want to find, you have to obviously expend the resources and the thinking towards it, and you will come up with a very high degree of success. And if you look at sort of how we've formed over the last 5 years, every year up to now, we've kind of raised about $10 million. $7 million goes directly into the ground through drilling. And that's resulted in about kind of $30 million of incremental market cap value as we progress very strong strategies, right? So that's how we've always thought about things in the past. If we're going to dilute ourselves, and we are big shareholders of this company, if we're going to dilute ourselves, can we see that kind of 3 to 4x return on every dollar of drilling that we progress? And so far, the answer is yes. And that's why we've gone from a $15 million market cap company when I first started to over a $350 million company in the last 4.5 years.
All right.
But I think the key is now, as we enter into the development phase, can that return be significantly higher? And we're obviously progressing that strategy.
Just closing off on your company with this chart here. This is your stock. It's up 121% year to date. Not year to date, over the last 12 months. Sorry. Compare that with copper, which is up 37%, and gold, which is up 43%. Something happened end of May that's saying your stock is soaring. Can you comment on this?
Yeah, no, actually, it wasn't anime. It was the beginning of this year. So we had been obviously in the progress of taking our new exploration discovery in 2023 of Northwest Expo and then putting it into a preliminary economic assessment, right? And so these assessments don't happen overnight. And
Yeah.
what we did is we progressively gave the markets the information they needed, starting from the initial resource in March of 2024 to the global resource in September of 2024 to the metallurgy, et cetera, et cetera. So we've been actually progressively providing market with evidence of what the eventual outcome was going to be, which we published in February. So the start of recognition of how extraordinary this would be versus an ordinary project started kind of at the beginning of this year. And so we announced in February, the market agreed with us that this was quite a spectacular project, and then became the upward trajectory. What happened in April was there was a large institutional shareholder that essentially was a 4x on our stock that was going to wind up their fund that I'd say responsibly sold their stock. And as you can see, it's probably at the 70-cent level. That's where it consolidated to. And then the day that they effectively finished selling their stock, that's when the upward trajectory continued on. So that's kind of the progression of the last 7 months. And it really started from the awakening that, oh, all these things that you're putting out over the last 2 years is now going to culminate in something that is quite special. And February was that time where we provided that document of evidence. And, I'd say that generally speaking, as we go through the marketing efforts, we obviously are in the middle of this announced equity funding. The difference in executing your plan as we are today versus 3 years ago, 4 years ago, when we just set out a plan, is quite significant. When we go into meetings today, people give us the benefit of the doubt. They ask what's next. Obviously, we've executed flawlessly over the last 4.5 years on our plan. As if you go back further, that's essentially the original share price appreciation starting from October of 2020. And so now they're asking, what's next? What are your plans? I'm essentially giving to you today what I'm giving to everybody else, institutional strategics, everyone else that I talk to. And the difference between now versus then is that we are getting the benefit of the doubt because we have executed very, very well over the last 4.5 years.
Yeah, this is one of the, just objectively comment on this. This is one of the few companies that I've seen that has outperformed not just the metals, but also the stock market, also the GDX and GDXJ, and it's up 1,255% over the last 5 years since 2020. So I'm just let's transition to the last part of the conversation, which is about the team itself and yourself. You started in banking. You started your career on the sell side, if I'm not mistaken. You never worked as a geologist before. So how did you end up on the executive team of a mining company?
Sure. So I started my career as actually a metallurgist.
Oh,
So I
okay.
graduated from the University of Toronto's Lassonde Mineral Engineering program. I worked with a gentleman named Pat Sheridan Sr. A lot of your viewers probably don't remember him, but he was effectively the grandfather of mining. He preceded Marie Pezim by about 30 years. And then I started to get interested in the investment banking side of it in and around 2000, which is where I started my career. During that period of time, as I mentioned before, I worked on multiple M&A transactions, and you develop a lot of good trusted relationships during that, that activity. And certainly Alex Davidson, I defended unsuccessfully Placer Dome in 2006, and he was obviously the executive vice president of Barrick, who took over Placer Dome at that period of time. That's how I established my relationship with him. And then, of course, our chairman, Dale Corman, another mining Hall of Famer, is probably best known for developing Penasquito, which is pretty much the same model that we're taking right now, and then selling it to Glamis Gold Corp for $1.2 billion in 2006. He then formed Western Copper, which I think a lot of your viewers would know, and I helped them obviously fund that and spin it out in 2011, which obviously culminated into this project as one of those spinco companies. So we effectively did the NGEX spin out in 2011 to self-fund all three projects, NorthIsle being one of them. And then in 2020, after 20 years of working in investment banking and trying to figure out how I can be more purposeful and affect change and be levered to my decisions and my success a little bit more, Dale tapped me on the shoulder and asked if I wanted to run NorthIsle Copper and Gold. And at that time, I was ecstatic. I thought it was one of the best projects out there. I didn't take a salary for the first year. I loaded up 100% on options. That was my compensation. I didn't need a paycheck after 20 years of investment banking. And then I early exercised those options last year in June, paying a tremendous unrealized capital gains hit without selling a single share. So I have a tremendous conviction in this project. This is the only thing I do. Lots of junior companies, you look at their boards and CEOs, they tend to diversify their own portfolio by sitting on a number of companies. This is the only thing I do. 100% of my time is spent at NorthIsle Copper and Gold. I don't sit on any other boards at this point in time. And I've now put my money where my mouth is and have put in a lot of original capital into this company. These are not free shares that were given to me. These are paid for shares over the past 5 years.
It's not easy running a company of this size. Do you ever wake up and think to yourself, gee, I'd rather be back at CIBC, managing director, making deals? Have all my analysts run the pitch decks for me, and I, just do meetings. When that you miss that
so
life?
that I don't miss, but I do kind of shame on me for thinking the junior mining industry was easy, and
Yeah.
coming in from a very institutional base, and having sort of the ear of some of the largest CEOs and chairmen and chairpeople in the world, having sort of that access, and then going to a junior mining company that was $12 million in market cap at that time. Obviously, I saw the opportunity, but let me just say, to get to this point today, it took a much longer time than I thought it was going to take. And so now I feel like I'm in my element. Now I feel like I do have the attention of the institutional investors group, the institutions that I, obviously had cultivated relationships for many decades, strategics, all the things that make me quite useful. 4.5 years later, I think I'm in that spot where I can be quite productive. So it's taken a long time. I've learned a lot of lessons during that period of time. To survive the last 4.5 years as a junior company in the way we have is it's a very proud moment. I do want to acknowledge our team who has just done a tremendous effort of being not only running this company like a real company should be run, but doing it on an extremely small G&A budget. We are one of the lowest, if not the lowest, burn rates from a G&A perspective. We're currently running like about a point two a year on G&A, which is quite remarkable for the amount of growth that we've been able to surface for our shareholders and stakeholders. So lots of lessons, lots of scars. But I got to tell you, what gets me up in the morning is the proposition that lies ahead of us and the ability that I can really create change. I can affect change. I can be quite purposeful as it relates to not only our shareholders, but our rights holders and our stakeholders moving forward.
Final question, and I'll let you go. This is something I've asked a while ago, many years ago. I asked Rob McEwen, former CEO of Goldcorp. I asked him, hey, what would you say to young people who are looking to enter the mining space? Should they? What would you say to them? And he straight up said, do you like money? Do you like to travel? Do you like to make a difference in the world? Yeah, that's why you should be looking into the company. So any advice to people, younger people watching this right now who wants to eventually be in the C-suite of any mining company in this sector, how should they approach it? How should they, tailor their education and their work experiences to one day be sitting where you're sitting now?
Well, I think we don't give this generation, the younger generation, enough credit, quite frankly. I think that they're driven by perhaps less or more altruistic things than we were driven by. I do think that they are purpose driven. By definition, they have grown up in a society and an environment where the number one thing is to be purposeful and impactful in the communities you work in. And I think that's something that we sometimes, as our part of our generation, don't appreciate as much as we should. If they keep along down that track of understanding, what problem, and again, they understand this. It's us that don't understand it as well. What problem am I trying to solve in this world? Right? What problem am I trying to solve in this world? How can I apply my skill set, whatever it may be, to trying and attempting to solve that problem? I think that's how you start the basis of any decision. You have to understand what your purpose and objectives are and mission in life is, and then all the smaller details will fall into place. And yes, you'll make a ton of mistakes. That's the other piece of advice I'd give to the younger generation is don't worry about making mistakes. The virtue of being young is that you have the ability to maneuver. You have the ability to take risk. Use that ability. Don't encumber yourself with, quite frankly, silly decisions of, I want to be an executive, I want to be a CEO.
Do they need to study metallurgy, geology, engineering? Is that necessary for them to gain a foothold?
Like everything is kind of bespoke, right? I hate to give general advice, but the reality is we've seen successes, certainly coming from Silicon Valley. One of the things that I noticed that is creating this $1 trillion pool of capital there is that firstly, education means nothing, right? In terms of what the most successful people, it's how much energy do you have to solve the world's problem? The people down there are full of energy, and their objective is to be disruptive and innovative and never take no for an answer. So if someone says, oh, you can't solve this problem, they say challenge accepted with a big smile on the face and a massive checkbook behind them, right? That to me is the essence of success, is that not only do you have to be purpose driven, but you have to have the energy and the tenacity and the drive and the willingness to disrupt, to be able to affect change and to be successful in your life in the end. And I think that affecting change is the driver for certainly groups that have achieved a tremendous amount of success. They don't go out saying, I want to be successful. They go out saying, I want to solve a problem, and I'm not going to fall within the paradigm that society has boxed everybody into in terms of what the solution may be. That's what I've noticed That's what I noticed very recently when came back from Stanford, is that environment is extremely prevalent, and that environment is actually driving all of the things that we're doing, including policy around, the U.S. securing of critical metals through very, very aggressive behavior. So all that to say is don't focus on the outcome. Don't focus on the question, I want to be a CEO. This is what I have to do. Focus on trying to solve a problem that the world needs to be solved through disruptive behavior with a tremendous amount of energy and dedication.
All right. Excellent interview. Thank you very much, Sam. Appreciate your time. Tell us where we can follow NorthIsle Copper and Gold in the meantime.
Sure. So our website is www.northisle.ca. We're obviously on Twitter, Facebook, LinkedIn, all the social media channels as well. Yeah, please reach out to info@northisle.ca if you want to get in touch with any one of us, and we will be more than happy to speak to you.
Good. I'll put the link down below, so make sure to follow Sam and his team there. Appreciate it, Sam. Speak again soon. Take care.
Thanks very much, David.
Thank you for watching. Don't forget to like and subscribe.